All right, traders, it is the 12th of January 2017. My name is Jameson. We're going to take a look here at oil, but we're going to do so through USO. And the reason I want to take a few minutes, I don't know, probably 10 minutes to openly discuss this, because I'm seeing a lot of, well, I'm getting a lot of questions about taking profits on within the industry, the oil industry here. And a lot of people are just closing their trades, which is fine, but they're doing so just because also that they think that prices are overbought, and they're, we're technically overbought. Well, we are. We can see that relative to this current trend here since July, the bullish ascending channel, we're overbought relative to the trend. We're overbought in the RSI. So I'm going to show you something that, well, I agree with you. We're overbought, but when we make some adjustments, you're going to realize that hey, we still have some upside, I believe. Now, also, the RSI is an oscillator, so it's fixed between 0 and 100. So if you leave the data point at a default, which is the 14-day period, you really only are seeing what it shows you. So unless you're willing to change those settings to a custom setting, you're limiting yourself. But we can see that we're actually transitioning from something that's trendless to now we're trending. You can even see that it's reflected here in the 200-day moving average, because even it's starting to rise. So the 20, the 50, the 100, and the 200 are all rising. We can see the 8-day exponential remains above the 13. This is very bullish. So I think that if prices stay here, or if they continue higher, the potential for reward remains significantly more than penny pitching for small little protect my profits. And it's still difficult to see here looking at a yearly chart, but we can see there's a lot of volume down here, and you can actually see that as the volume expands, the down waves are kind of shortening. So we're seeing less reward for the effort that's put in for driving prices lower. So, retrospectively, it's very easy to say, oh, this is bullish absorption. And well, of course, prices are rallying through there. But when we're down through here, that's very difficult to make that decision. Now, so I do have the RSI oriented up here on the top of the chart. We have volume, and then below here, this is the percentage volume oscillator. And I have this at a custom setting. It usually defaults and has a divergence, like the moving average convergence divergence, like the MACD. I've eliminated that so that we just have the difference percentage-wise between the exponential moving average of the volume. So we can see that there's volume here, and we can trend, average, an average volume. I actually am going to use the 5-day exponential average and volume against the 100-day average. So, well, for example, here in November, we can see that we're probably right around 20%. So that tells me the 5-day exponential moving average increased and was trading 20% greater than the average volume over the last 100 trading sessions on an exponentially smooth average. And that's important here because, we can actually see that we're breaking through this level of resistance, and we can see that there's, I can visually, subjectively say, yeah, there's more volume that's there. But when you actually look at the difference here, you can actually objectively say, yes, it is. And relatively speaking to what we have, volume is 20% higher than it has been, or actually it's 20% from the zero line. But if you look from, when we're trading here at minus 40, that's a 60% improvement in volume, and that volume is actually having a positive impact on prices. So now we can clearly say that demand is overcoming supply, and obviously this is a shift in trend. And the shift in trend is important because, the RSI can't just be, well, let me say this, the RSI will become overbought at different points, whether we're in a bull market or a bear market. So the references that are being made as far as the RSI being overbought, they were made when we were in a bull market, and we're actually transitioning from a bear market to that of a bull market. So conditions may be a little different. Now, again, we may see a pullback, but is this worth, I don't know, liquidating all your profits on some of your common equity trades? It's up to you. I don't care. But let's extend this out a little bit. So if we just go out to 3 years, let's see what we have. Well, 3 years very quickly, we can see that we're trading off of this base and we're breaking through resistance. So I'll have to go to make some annotations. But if we just draw here, I did this a second ago. So I think we're going to find that there's going to be a nice little resistance line right through these 2 points. So what I see is that we have this huge broadened base from 2016 to 17, from 17 to 18. We had this 2-year base. We're finally breaking through it. And the first sign is something's finally bullish and we're finally breaking through it, and people want to short it and they want to sell and take their profits. I see that there's still, I would speculate, there's still much more upside, moving forward. And obviously you can see now that I'm looking at a longer time frame. So if someone's pinning pension, or I'm sorry, that's a negative connotation. If somebody is using a smaller, time frame, so be it. But again, I think there's potentially a lot more upside through here. As we are finally breaking through this level of resistance, this was a level of support. This level of support was confirmed as resistance, and prices have remained below that level for 2 years, and now we're breaking through. Now we're breaking through, and we're doing so, and it's kind of creating overbought conditions using a default 14-day average. Now you can also see volume-wise that, hey, we're finally breaking out on strong volume, but this volume relative to what we have here is but it's not a lot. It's not that impressive. And we can see here the volume relative to the extremes here with the PVO is just kind of getting started. So let's just go ahead and extend this out a little bit more, because ultimately we're trying to compare overbought RSIs. And let's just see, I don't want to cram the chart and make it ridiculous. All right, that's silly. So let's just, it's hard for me to convince you that this is a bull market when we're looking at this big drop. So I've got to make that go away. Let's just do 8 years. All right, so what we're going to do here very quickly is let's just highlight these overbought conditions. So it's horizontal, we want vertical. All right, so we'll just say from, let's bracket it. Now these are overbought conditions in a bull market. Now, when this is a bull market, we knew this was a bull market, but now retrospectively, we can see that this is overbought conditions at the end of a bull market. All right, so now here we are. And here we are again. So we can see that, here, these aren't quite as high. So let's just try to keep this. So we can see here that, there's overbought, there is a dip, but we continue higher. We're overbought. There's a, that's a respectable dip, but we continue higher, and now we're overbought, and then here's, we puke. And then now you can see that, when we're overbought in a bull market, the threshold for trading higher within that, the oscillator ranges are higher. And when we're in a bear market, we don't really create, as much overbought conditions. And you can see it shift. In a bull market, I don't really, we do have some oversold conditions, but it's just not quite as frequent. But now we're actually selling off when we're in a bear market. You can see it's a little, deeper threshold here for being oversold. Now let's change something. And I'm just going to change the 14-day, because right now the RSI is just looking at 14-day periods. I'm going to just change it to a 50-day period. And what does that do? So now I'm going to tell you that, yes, you're right, we are overbought. And you can see that, these are the same time frames, or same bracketed highlights for the overbought conditions using the 14-day period. Now, here's the thing: is that now when I switch this from a 14-day calculation to that of calculating the 50-day calculations, we can actually see that here. let's just highlight this. Let me get rid of this. It's pretty obvious. Is that we are now more overbought than we ever have been. So I am telling you that you're right. We are overbought. And from the time that we're looking at here in the chart, I agree with you. We are more overbought than we ever have been. But now using the 50-day average for the RSI, well, technically we're not overbought. You can see here that something has changed. Conditions are changed. And the reason I take the time to try to articulate this is because conditions are changing. We appear to be transitioning out of a bear market to that of a bull market. We finally break a very key level resistance. So I think the tolerance for overbought and oversold conditions changed. So by changing the defaults to a different period, now we can see, yes, we are right. We're significantly more overbought than we have been relative to what we're looking here, the time frame. But additionally, we can also see that there's more upside. We can see that there's much more upside before we create overbought conditions. And I couldn't speculate, where that level is. I might say that the next level resistance would be here. It would be at 16 for USO. So I might say, again, from a larger time frame perspective, that it may be until USO actually continues to trade higher into $15 to $16 before we're actually overbought using a 50-day calculation period for the RSI. So very informal. I hope I didn't confuse anybody. I just maybe want traders to be open-minded. But what does seem silly to me is that finally we're breaking a level of resistance, and we're finally making a nice change and transition from that of a bear market to a bull market. And the first uptick that we get above this range, I'm seeing some bearish tweets, and that to me just doesn't make any sense, which is why I want to take a moment and just maybe provide a different perspective. So I hope maybe you find that helpful, and we'll see how it goes. Good luck, everybody.